or any asset, anything gets value from one of two areas. For those of you who don't know who I am, my name is Stephen Speck. I'm one of the managing partners here at Prospective Capital, where I run a multi-million-dollar portfolio of real estate. I have absolutely nothing to sell, and the reason I put these videos out pretty much every week is just because I want to help other people become intelligent investors. For me getting started, that was really hard to do. I had to read a ton of books, and I didn't really have a great mentor who was putting out videos to kind of explain some of these concepts, and so I'm trying to do that for you. So in today's video, we're talking about how do we know what an investment or what an asset is worth? I see a lot of different stuff out on social media from finance bros or just terrible Reddit commentary or whatever of just people who don't know what it's worth. Okay, so any investment, anything gets value from one of two areas. Think Bitcoin, think gold, think stuff like that, where the value of the asset or whatever you're buying comes from outside of it, meaning you're reliant on somebody else to pay you something more than you paid, and that's how you define the value of it. Okay, so when you buy Bitcoin, your guess or your hope is that somebody's going to pay you more. Okay, there is nothing inside of it or inherently that makes it valuable. Great example of this is, how do you tell what Bitcoin's worth? You're denominating it still in dollars. It's not that you actually care about the Bitcoin because you're really caring about the dollars because you want your dollars to go up. See what I'm saying? It's outside of the actual asset that you're buying. Okay, the difference or this type of investing, in my opinion, is really, really hard. Okay, it's not really investing either. I think it's more like gambling. Okay, and I don't think it's smart. That's not what I do. What I do is intrinsic investing. What's intrinsic investing? Intrinsic is where the value of an asset or an item or whatever you're buying comes from within it. What does this mean? This is where you need to think of like Microsoft, Apple, Google, or rental properties. The value of the asset that you're buying comes from within it, meaning it's producing something. So if you buy it, you can just hold on to it and you're going to get paid. You're going to get some type of return because the asset is actually producing something. Okay. This type of investing is actually good. This isn't gambling. And extrinsic investing, in my opinion, is more like gambling. Intrinsic investing, when you know what something's actually producing, is actually investing. It's not gambling because you can actually use math and logic and understand what something's actually worth. Okay. And how can I reinforce this? Okay. I reinforce this by saying, if I buy an investment, okay, and somebody's not willing, and I buy it on intrinsic value, and somebody's not willing to pay me more for it, you know what I can do? Sit and wait, because I get paid as I sit and wait. Okay. That's the difference between intrinsic and extrinsic. So when it comes to intrinsic, how do we know what something's worth? Extrinsic is it's valued on what somebody else is willing to pay you. Intrinsic, it's valued on two things. Number one, cash flow. Number two, the return that you want. Here's an example. Say we have a rental house that's making $10,000 of cash flow per year. And we want an 8% return. We then know what we can pay or what this is actually worth to us. In this case, it's worth $125,000. Why? Simply take our $10,000 of cash flow, divide it by 8%. That gives us $125,000. Meaning, if we paid $125,000 for this, we'd get an 8% return per year. Now, I've kind of glossed over some higher level things, okay, and kind of tried to stay out of the weeds. And so I know there's going to be people who are like, well, you're missing this point and this point and this point, but we're keeping it simple, okay? That's intrinsic investing. That's why 90% of millionaires in the United States are made in real estate, because real estate is very, very simple. It's very simple to figure out the cash flow. It's very simple to figure out the returns. And so you're intrinsic in value investing. You just hold on to it for a long period of time. Okay. Same thing with the stock market. This works for the stock. So if it's this simple, why is it so hard for people to understand? Why don't more people know this? Number one, people probably don't take the time to actually do it. And then number two, it's not easy to figure out what cash flow is. Okay. Look at Microsoft. Microsoft has financial statements, and most people do not have the financial knowledge or power to be able to go through and sift through and understand what is the cash flow of that company. Okay, and so they come up with like rough rules of thumbs like EBITDA and stuff like that, and it can help you out, but it's not always exact. And so it's really hard to figure out what the cash flows of these companies are. That's what basically investment bankers do, and basically private equity investors do, which is what we do, or what professional investors do. Okay, you got to have kind of a lot of depth of knowledge to figure out what the cash flow is, and then you've got to figure out what is the desired return. The desired return is really dependent on the market. Yes, it's what you want, but also you can't just say I want a 20% return in a market where there is no 20% return. It's kind of set by the market as well. So all that stuff that's a little bit more nuanced, it's very difficult, and that's why you got people like investment bankers who aren't always very good investors, and then private equity people, professional investors. That's basically all we do all day, is we're just figuring out what cash flow is, and we're figuring out what return we want or what the market's returning. So anyways, don't need to talk about that. That's today's video. How do we know what something is worth? It's based on either we're going to invest by intrinsic value or extrinsic value. I like intrinsic value. It's actually investing. And then we determine it based on its cash flow and the rate of return that we want. If you like this, like, share, subscribe, leave a comment. Tell me I'm okay, not good, whatever. It doesn't matter. But thanks for joining.